A lot of noise to strip out. So help the viewers understand, what is trend based on this latest number?
If you just look at the jobs numbers, you probably still say something like 200,000. Obviously, the average of the last couple of months was well above that, but I do think there was probably quite a lot of weather in that, especially in the January number. Weather was very mild. You wouldn't believe it looking outside
week.
Right now during the survey week. So that helped, and you saw a big increase in construction employment, other weather-sensitive sectors. But even with a reasonably generous subtraction, it's still a very solid number.
Others are pointing out the labor force. Are you seeing a trend there that we've been waiting for several years?
Yeah, so on the household survey, we also did have, obviously, an increase in the unemployment rate, which was actually not driven by furloughed workers, but really by an increase in labor force participation. And we're now just above the top end of the range that we've seen over the last 5 years, despite the fact that the structural demographic trend is still downward. So, I do think it is encouraging that we're pulling more people into the workforce. We're also paying them somewhat more, even though the latest wage growth number was on the softer side. Generally, the news on that has also been more encouraging. So, I do think there is more, labor demand is pushing into that.
The wage number, we saw a good job growth in places like construction, which is a high-paying sector. Why wasn't it stronger?
Well, I think it's payback for the last couple of months. We had, two very strong numbers. There was also an upward revision to the November number. So having a little bit, 2 steps forward, 1 step back isn't that surprising. The year-on-year number for average hourly earnings is 3.2%. Other indicators are actually even a little bit stronger than that. So I would say that's a glass half full kind of story on wages over the last several months as a whole.
I know it's just one day, but we get this barn burner of a jobs number. We get a contraction in ISM prices paid. Is this as good as it can get? This is pretty good, right? Overall, in terms of low inflation, and strong employment.
Growth. Yes, I think the numbers are definitely supportive of that kind of very favorable combination. You see it, if you take the month-to-month number on average hourly earnings, that's obviously also less inflationary. The inflation numbers generally have been softer. I think over time, core inflation, I still think is likely to go a little bit above 2%, but probably not for the first half of the year.
And you've been reining in your expectations for hikes.
For sure. And the main reason for that has been the tightening in financial conditions. I do think that had a big impact on the Fed. It came in sort of in 2 steps. One step was in December, and I think there was another step, obviously, this week. And that's changed our outlook for Fed policy quite a lot. We no longer look for quarterly hikes. We still think, 1 hike in 2019, but it's a very different outlook at this point. And for now, they're clearly on hold.
You went from 4 hikes in 2019 to 1 hike in 2019. Right. The market is at 0 hikes in 2019.
Markets, looking for some cuts if you go into 2020 for sure.
So why are you not there?
Because I think the economy is still doing pretty well. I think we're still growing above trend, not by as much as we were in the middle of last year, but still above trend. So I would still expect the unemployment rate to come down over time, despite the latest increase. And I think the inflation numbers are low now, but by the end of the year, I would still expect them to be above 2% on a core basis. And I think in that sort of environment, you'll still get, maybe a hike, maybe 2 hikes. They could be done, certainly possible, but it wouldn't be my best guess.
Have we moved away from recession risks and fears after what we saw at the end of last year and a nice comeback for the markets in January? Is that off the table?
Well, I think the market view was that it was a very clear and present danger a couple of months ago, and markets have definitely taken those down. If I go around and talk to people, there's still quite a lot of concern about recession. My own view is that we don't really have the sort of imbalances that have created recessions in the past. Inflationary imbalances, for the time being, don't look particularly threatening, and in particular financial imbalances, which has really been the driver of recessions in the last 20, 30 years, private sector looks in very good financial shape. So I don't think that we're in a bubble economy the way we were really prior to both 2001 and obviously 2007, 2008.
Finally, Goldman works to put probabilities on at least short-term China trade resolution, but you've been, I think, arguably largely non-committal, right? Odds are not way off of 50%.
We have been reluctant to move too far away from 50%.
What do you need to see to be more convinced either way?
Well, I think, so right now we're expecting a resolution, but not with a great degree of confidence. And, we'll have to see what the, what the outcome is. I would say the most recent indications have been consistent with a resolution, but I think there could still be twists and turns. So I wouldn't count my chickens quite yet on this.